is something pretty wild, a really powerful and, yeah, complex case being made for a huge shift in the silver market. We're talking paper promises, real physical shortages, and a monetary system that, well, some analysts think is right at a breaking point. So let's jump right in. Let's kick things off with this pretty bold prediction from Michael Oliver. He's one of the market watchers we're looking at today, and listen to what he's saying. He's not talking about some slow, steady climb. Nope. He's calling for a sudden, almost violent event that just completely changes the game for silver. And you know what? The way the market's been acting lately, it kind of feels like the stage is being set for some major fireworks.
I mean, the market has just been absolutely bonkers. Just the other day, the spot price of silver went on this insane run. It spiked, hitting an intraday high of around $84 an ounce. Can you believe that? A level that just completely shattered old records and sent, well, shockwaves through the trading world. It was this crazy parabolic move that honestly caught a lot of people flat-footed.
But hey, what goes straight up, right? It can come down just as fast. And it did. In just a few hours, the price plummeted by over 15%. A really brutal correction. It wiped out anyone with leverage, and, of course, the headlines started screaming about a bursting bubble. It's the kind of drop that really shakes your confidence and just causes straight-up panic. And then, just as fast as it dropped, it snapped right back up, a rally of more than 10% that erased a huge chunk of those losses, all inside this insane 24-hour whirlwind. It's like Michael Oliver said, it didn't form a base, it didn't trade sideways for a bit, it just went whop right back up. It left pretty much everyone, investors and analysts alike, totally breathless.
So the big question is, what on earth is going on here? Is this just a bunch of speculation gone wild? Or are we seeing the symptoms of a market that's just broken? Well, according to the analysts we've been looking at, it's a story with a lot of different layers. You've got market mechanics, a massive supply shortage, and this huge macroeconomic story that could just be pouring gasoline on the fire.
Okay, so to really get our heads around this explosive case these analysts are making, we're going to build it up piece by piece. We'll start with this unhinged market, then look at paper versus physical silver, the huge supply squeeze, the bigger monetary picture, and then we'll get to that explosive 2026 outlook and what it all means for you.
All right, first up, an unhinged silver market. Let's just set the stage by looking at the pure chaos on the charts. This is not normal, folks. And to get why, you first have to understand that there are really two different worlds of silver, and right now, they're crashing into each other. So to really get this volatility, you've got to understand this fundamental conflict. Think of it like this. On one side, you've got paper silver. That's stuff like futures contracts, ETFs, digital promises. And like analyst Lynette Zang points out, you can basically create an infinite amount of these. But then, on the other side, you've got physical silver, the actual metal, bars and coins. There's only so much of it. And the core argument from these analysts is that the paper market has written checks that the physical market can't cash. They've promised way more silver than actually exists, and that makes the whole system super fragile. Okay, let's move on. This all brings us to the mechanics of that paper market, which is where a lot of analysts say the real trouble starts. It's a complicated beast, for sure, but there are a few key things happening right now that are creating what a lot of people are calling a ticking time bomb. So, one analyst who goes by the finance guy points to this really interesting phenomenon he calls the Ghost Week liquidity trap. Picture this. It's that week between Christmas and New Year's. All the big shot traders are on vacation, right? So trading volume just tanks by like over 70%. But all the open contracts are still there. This creates this super thin, dangerous market where one big buy or sell order can send prices flying in either direction. It's a trap. And here's where all these different ingredients get thrown into the pressure cooker. First, the CME exchange is trying to turn down the heat by jacking up margin requirements. But at the same time, the big banks, the commercial traders, are holding massive short positions. They're betting big that the price will go down. Then you've got industrial buyers who actually need the metal, but they can't find it, so they have to jump into the futures market to buy. Now imagine their big buy orders hitting that super thin Ghost Week market. Boom, it can trigger a massive short squeeze. And all of this is happening in a system where some analysts, like Bill Holter, claim there could be as many as 300 paper promises for every single ounce of real silver in existence. Think about that. Now, underneath all this chaos in the paper market, there's an even bigger story brewing. And this one is about the physical reality, a massive structural supply squeeze. And this isn't something that just happened last quarter. No, this has been building for years, and it might be hitting a breaking point. Just look at these numbers. According to data from the Silver Institute, for 7 years in a row, the world has used more silver than it has mined. 7 straight years. That means we are literally draining the world's stockpiles year after year. This isn't some wild guess or forecast. It's a fact. It's the documented reality on the ground, and it makes all those paper promises look, well, pretty shaky, doesn't it? So where is all this silver going? Well, here's the thing. Silver isn't just for coins and jewelry anymore. It's an absolutely critical industrial metal. I'm talking solar panels, EVs, all our electronics, they all need it. And this demand is what we call inelastic. That's just a fancy way of saying these industries have to buy silver. They can't just stop. Their production lines depend on it, no matter what the price is. And here's the kicker. Not only is demand growing, but the technology is actually becoming more silver hungry. The finance guy points this out. The solar industry is switching to these new, super efficient cells called TOPCon cells. Sounds great, right? Well, here's the catch. They need 50% more silver for every single panel. That's a huge demand multiplier that it feels like the market is just not paying attention to. Okay, so we've got this intense physical squeeze. But now we need to zoom out, because all of this is happening inside a much bigger story, one that some analysts believe is about the stability of, well, our entire monetary system. They're arguing that what's happening with silver isn't just about supply and demand. It's a symptom of a way bigger problem. Check this out. Analyst Mike Maloney makes a really compelling point. Global monetary systems don't last forever. If you look at history, they tend to get a major reset every few decades, usually after some big crisis. He argues that our current system, the one we've had since 1971, is showing some serious signs of stress. And he believes we are right on the edge of what he calls a grand global economic reordering. And Michael Oliver, he sees the cracks forming in what's supposed to be the foundation of the whole system, government bonds. I mean, for decades, bonds were the safe place to put your money. But Oliver is warning that if people lose faith in bonds, it could trigger this massive rush for the exits. People will be scrambling, asking, okay, where do I put my money now? And he thinks the answer they'll find is in what he calls monetary metals, gold and, you guessed it, silver. So we've built the case, we've looked at the fundamentals, the technicals, the big macro picture, and now we get to the really dramatic part, the price outlooks. Given all the pressure that's building up, these analysts are forecasting something that goes way beyond just a simple bull market. Okay, let's start with Michael Oliver. Based on the same analysis that helped him call the huge moves back in 1979 and 2010, he's saying silver isn't just going up, it's entering a new reality. He thinks a move into the hundreds of dollars, we're talking $200 or even more, is on the table in just the next 6 months. That is, if that paper market finally snaps. Now, other analysts might not give you an exact number, but they draw some pretty scary parallels to other commodity squeezes that basically shocked the world. Think about oil running to $147 a barrel in 2008. Or remember the nickel squeeze in 2022? The price went from 29 grand to over 100 grand in 2 days. In every one of these cases, it was the same story. The reality of the physical market just steamrolled the fantasy of the paper market. And just to give you an idea of this scale we could be talking about in a full monetary reset, Mike Maloney lays out this thought experiment for gold. He calculates that if, and it's a big if the U.S. were to back just its physical cash with its gold reserves, that would imply a gold price of over $10,000 an ounce. Now, it's a hypothetical, sure, but it really shows you how much the dollar could devalue in that kind of crazy scenario. Okay, so after all that, what does this actually mean for you? Well, these analysts aren't just throwing out wild predictions and walking away. They're watching specific things for clues that this whole thesis is playing out. And if you want to follow along, here's what they say you should keep your eyes on. All right, here are the key signals they're watching. First, physical premiums. That's the difference between the paper price and what you'd actually pay for, say, a real silver coin. If that gap gets wide, it's a huge red flag. Second, keep an eye on the March 2026 futures contract. That seems to be ground zero for this whole battle. Third is the industrial calendar. Watch what happens in the first quarter when all the big companies start buying for the year. And last, check out the weekly reports that show you exactly what the big banks are doing with their bets. So in the end, this whole incredible case really boils down to one massive question. Are we watching the very beginning of a fundamental repricing of silver, not just as a commodity, but as real money? Or is this just another insane speculative mania, the bubble of a lifetime, that's just waiting to pop? That's the big question to think about as all of these forces keep grinding against each other.